Welcome to the Noticias El Salvador SV podcast, a space for conversation and reflection where we explore current events in El Salvador and around the world. If you'd like to support this project, you'll find the payment options, PayPal or QR Bitcoin, in the content description. For those requesting interviews, please note that we are not currently offering podcasts in that format. However, if you'd like to advertise your products, please email us at the address in the description. Find us on your favorite platform as Noticias El Salvador SV. Okay, let's unpack this deep dive. We have a crucial stack of sources today. We're going to be taking you through some really significant movements in international finance, major geopolitical flashpoints, and of course, critical national developments.
That's right. And our mission today is really to synthesize all of these threads, these global and domestic economic threads. We're going to be focusing particularly on the financial implications, where capital is flowing, and maybe more importantly, where risk is starting to accumulate.
Exactly. So we're going to prioritize the international economy first, just to set that global context, and then we'll transition into the national landscape.
Yeah.
And I think we have to start with the country's biggest financial experiment, El Salvador's adoption of Bitcoin as legal tender. That was back in September 2021.
And it remains a story of aggressive, high-stakes investment. The latest figures on accumulation are, well, they're remarkable. The current government holdings are now at 7,474.37 BTC.
And what's the value on that?
It's valued at over $688 million.
Wow. And it's the strategy behind that number that really demands attention, isn't it? Our sources detail a huge recent move.
A very significant move. The government acquired 1,090 BTC for $100 million, and they specifically targeted the moment Bitcoin's price dipped below that $90,000 mark.
So that's the classic buying the dip strategy.
Wow. It's the textbook definition, yes. But it also, it reflects a real comfort with extreme volatility. As we're talking, Bitcoin is trading around $91,742, and that's after recovering from a recent low of just under $90,000. So this kind of aggressive play, while it's building up reserves, it naturally draws a lot of institutional scrutiny.
And that scrutiny is coming primarily from the International Monetary Fund, the IMF.
Yeah.
Their concerns are pretty well documented at this point. Volatility risks, potential loss of monetary control, but there's a critical contradiction here.
This is maybe the most fascinating financial detail in our stack today. Our sources note that El Salvador they had previously assured the IMF that it would not increase the total quantity of Bitcoin stored in its wallets.
Right, there's an agreement, a commitment.
A stated commitment, yes. And yet, these recent massive purchases, they directly contravene that.
So that's a clear break from a previous understanding. Yeah. What does that mean exactly? Is this a calculated risk, or does it signal something else? A sort of redefinition of their own investment autonomy versus global rules?
I think it signals that investment autonomy is being prioritized. Absolutely. The government is, in essence, betting that the long-term appreciation of Bitcoin will outweigh any short-term friction or even punitive measures from international lenders. It's a public declaration, really. They believe the future growth of this asset justifies diverging from traditional financial advice. It's a bold calculation.
And it goes beyond just currency, right? The use of the underlying technology is also pretty noteworthy.
Exactly. They're looking at innovative uses for blockchain, things like digitalizing official documents to get secure, time-stamped records. The goal there is greater administrative efficiency.
And that's not just a domestic project.
No, it's not. They've partnered with Pakistan to explore using this technology for public infrastructure development. That kind of partnership suggests El Salvador is really trying to position itself as a global leader in applying decentralized tech.
Okay, let's shift focus a bit to the broader regional and global financial movements. It's clear the world economy is moving on multiple tracks at once.
It really is. You see these strong traditional capital flows right alongside massive corporate expenditures. For instance, remittances flowing into Latin America, driven a lot by Central America, they hit a record $174.4 billion in 2025.
And that kind of capital inflow is a huge engine for stability and consumption in the region.
A crucial one. And then on a global scale, you see these huge indicators of market optimism, even in high-risk sectors.
And the airline industry.
Look at the airline industry, exactly. Emirates just placed a monumental $38 billion order for 65 Boeing 777-9 planes.
$38 billion.
Yes, an order of that size is one of the strongest signals you can get of long-term capital expenditure. It's confidence in the global travel and logistics sector for the next decade.
Now let's pivot to the geopolitical context, because that always introduces complexity and risk into these financial equations. We're seeing escalating tensions between the United States and Venezuela.
Yes, and that's highlighted by the arrival of the world's largest aircraft carrier in Caribbean waters. That military deployment immediately raises the risk profile for the entire region. It's a very high-stakes dynamic.
And at the same time, the political rhetoric is volatile.
It's fascinating. You have comments from a former U.S. president indicating a potential willingness to speak with Venezuelan President Maduro. And that's a stark contrast to earlier, extremely hardline statements that even included threatening military action against Mexico to stop drug trafficking.
That kind of rhetorical whiplash is itself a risk factor that investors have to price in. Meanwhile, domestically in the United States, there's news focused on government accountability. The House of Representatives approved a law compelling the Department of Justice to publish the Jeffrey Epstein files.
And that story has a huge impact on public trust. It really does. When institutions are perceived as failing on transparency, it just breeds instability. On a related note, we also caught a specific detail around those files. A political figure called a journalist a piglet when questioned on the topic.
Right. And it just shows how quickly high-level political discourse can degrade, even when discussing really serious matters.
Yeah. And while that's happening, you have the Vatican contributing a moral dimension to the global conversation. The Pope lamented what he called the extremely disrespectful treatment of migrants within the United States, which keeps those humanitarian concerns in the international spotlight.
And conflict, of course, remains a persistent factor elsewhere. Our sources have a sobering report on a recent Russian attack on Ukraine.
Very sobering. It involved 476 drones and 48 missiles, leading to 16 deaths.
And speaking of security in that region, there was a claimed assassination attempt against Sergei Shoigu, the Secretary of the Security Council of Russia.
That's correct. Russian sources reported an attempt was frustrated by the FSB in a Moscow cemetery. They claim Ukrainian involvement. But, and this is crucial, independent verification of that claim is reportedly lacking. Still, whether it's proven or not, the fact that it's even being reported elevates the perceived instability at the highest levels of Russian government.
Okay, before we move fully to national news, just two quick international notes. The Louvre had to reinforce security after a major jewelry theft.
A major failure in physical security. And the other?
2 judges resigned from the Miss Universe pageant over possible fraud claims, which raises questions about integrity in, even massive cultural events.
Right. Significant events that signal these broader systemic concerns, even outside of politics and finance.
So now let's transition our focus fully to national economic activity and the regulatory changes happening right here. This is where we find a really stark contrast in performance.
Absolutely. We have some powerful data showing domestic strength. The nation's economic activity grew by a robust 4.78%, and the construction sector is reported to be leading the entire region in growth. That's a massive internal stimulus.
A huge stimulus. Yet there's the crucial counterbalance.
We do. On the other hand, the nation registered the lowest export growth in all of Central America in 2025. And this raises a fundamental question for any analyst. If domestic construction is booming, why isn't that vitality translating into external trade success?
So what does that suggest to you?
It suggests the growth engines might be sort of domestically siloed. They aren't diversified enough to compete effectively in global or even regional markets yet.
And that's something that requires some serious structural analysis. We also have details on a major regulatory overhaul proposed by the Minister of Economy. This is going to impact nearly every merchant.
This is a fundamental shift in how businesses interact with the government. The proposal is to create a new law for the registration of legal entities, the RPJ. It will mandate new registries for all merchants and communal associations within the National Registry Center, the CNR.
And what's the key implication here for, say, a small business or a community group?
The implication is entirely financial. The new law establishes a rigid fee schedule for all CNR services, and critically, it prohibits free services, the only exception being state institutions.
So entrepreneurs, small merchants, grassroots associations, they're all going to face new mandated costs for services that might have been free or subsidized before.
Exactly. It shifts the financial burden onto the public. It's a move that requires very close monitoring.
And speaking of monitoring costs, the Defensoría del Consumidor detected 100 cases of improper charges related to year-end bonuses, the aguinaldos. So that oversight highlights that persistent need for consumer protection, even as all this restructuring is happening.
Definitely. And before we move on to our final segment, we just want to give a quick reminder of how you can support this discussion.
Your support really does keep this project going. It allows us to continue these deep dives into the source material. We rely entirely on you, our listeners. You can collaborate or donate using the PayPal or QR Bitcoin options located in the content description. Okay, moving into our final segment, national social infrastructure and safety updates. And we can begin with a very positive security metric. Tuesday, November 18th, concluded with 0 homicides.
That is a powerful data point, a reflection of public safety efforts. However, on the other side of that, regulatory compliance remains a serious concern. Our sources estimate that about 184,000 motorcyclists are circulating without a license.
That is a huge number and a significant risk on the roads.
A very significant risk.
On the legal front, updates on both contemporary and historical crimes. A transnational cybercrime network trying to hack ATMs was dismantled. And in a crucial note of historical accountability, ex-military personnel were sent to trial for the 1981 massacres, allegedly committed by death squads.
And we're also seeing a significant restructuring in social services. The Assembly approved the dissolution of 2 important bodies, the Councils for Persons with Disabilities, CONY-IPD, and for Older Adults, CONY-PIM.
And what does dissolving those councils signal for the delivery of social services to those groups?
Well, it signals a move towards centralization. The stated goal is often greater efficiency, but it typically means services from these specialized, autonomous bodies get absorbed into broader government ministries, and that can raise concerns about resource allocation and whether the specific needs of these groups will remain a top priority.
Okay. On the tech front, though, we're seeing a clear push toward digital governance and high-end infrastructure. The Dr. SV application expanded its coverage to citizens aged 41 to 50, and it now incorporates an AI-assisted mental health program.
And this commitment to advanced tech is confirmed by a massive acquisition. The nation is reported to be the first in the region to acquire the powerful NVIDIA B300 chips. And you have to understand, these are not general-purpose computer chips. They are specialized for high-level computing. It signals a major investment in AI, machine learning, and national supercomputing capabilities.
So really looking toward future digital infrastructure.
Absolutely.
And finally, on a cultural note, the San Miguel Carnival is projecting a record attendance of nearly 2 million visitors this year. A huge event.
Wow. Okay, so we have covered a vast landscape here. From high-stakes Bitcoin investment and global tensions to the specifics of domestic regulatory costs and social service restructuring. Let's try to synthesize these threads. Here is our 60-second summary of the 3 most important takeaways from this deep dive. First, Bitcoin autonomy versus global commitment. El Salvador is aggressively pursuing its Bitcoin strategy, achieving record reserves. This strategy has led them to openly diverge from previous commitments made to the IMF regarding how much BTC they hold. They're prioritizing investment autonomy over regulatory adherence, which is a significant risk calculation. Second, the divergent national economy. Domestically, there is clear economic momentum. It's driven by a construction boom, reflected in that 4.78% GDP growth. But, and this is a big but, this growth is structurally constrained. It's evidenced by the lowest export growth in Central America, suggesting the current expansion is relying heavily on internal stimulus, not diversified external trade. And third, digitalization and a cost shift. The government is making a dramatic push towards advanced digital governance. We see that with the acquisition of cutting-edge NVIDIA chips and AI-assisted health services, but at the same time, key administrative changes, like the new RPJ law mandating fees for all CNR services, signal a shift toward an all-fee structure for essential business services.
That last point is crucial for small businesses. So here's the thought to leave you with. What are the long-term implications for local enterprises as the government shifts to this all-fee structure for essential services, like the National Registry Center, the CNR? Especially considering the stated goal is to reduce financial dependence on traditional structures. How will this new cost structure affect small businesses and community organizations who are just starting out? That question about accessibility and cost is one we must all continue to explore as this transition unfolds. Thank you for joining us for this deep dive. Once again, we want to remind you that your contributions help support this project and allow us to continue this essential conversation. You can collaborate or donate through the PayPal or QR Bitcoin options in the description. If you found this content valuable, please share it with others. Find us on your favorite platform as Noticias El Salvador SV.